Hi friends, I welcome you to the next video, and in this video we'll start with a new topic. We'll talk about bank reconciliation statement. So what is bank reconciliation statement, how to prepare bank reconciliation statement? We will take it up in the next videos, but in this video we'll try to learn the fundamentals which are required to prepare a bank reconciliation statement or to understand a bank reconciliation statement. Okay, so first of all we'll try to see cash book. Now when we talk about cash book in this chapter or in this topic called as the bank reconciliation statement, we are always referring to the bank column of the cash book, or we are simply referring to the bank account in our ledger accounts. So in the books of the business, whenever we talk about cash book in this topic called as the bank reconciliation statement, we are always referring to the bank column in the cash book, or we are talking about the ledger account for bank account. In bank account or in the cash book bank column, deposits are debited and withdrawals are credited. Whenever we deposit money, we pass the entry bank to cash. So bank account is debited. Whenever we withdraw money from the bank, we pass the entry cash to bank. So bank account is credited. So deposits will be debited and withdrawals will be credited in the bank column of the cash book. Now we also have to see what is a passbook. Now this passbook is maintained in the books of the bank. So bank is also going to maintain its books of account. So passbook is books of the bank. It is nothing but the customer account in the books of the bank. So if we are having a bank account, if we are maintaining a bank account, the bank will maintain our account in their books, or the account of the business or the customers in their books, and passbook is nothing but the customer account in the books of the bank. So whenever we say passbook is our account in the books of the bank. This is how the bank maintains our ledger account in their books. In the passbook, deposits are credited and withdrawals are debited. Let us say we deposit money in the bank. Now what will be the entry in the books of the bank? Bank is getting cash. So cash account will be debited. Who is giving this cash to the bank? Customer. So customer account will be credited. That is why deposit is credited. And if there is a withdrawal by the customer is the receiver of the money, hence customer account will be debited and cash account will be credited. Customer account will be debited, that is why withdrawals is debited. Okay. So in a passbook, deposits are credited, withdrawals are debited. In cash book, that is a bank account in the books of the business, deposits are debited and withdrawals are credited. Okay. We're just trying to learn the fundamentals required to prepare a bank reconciliation statement. Now, in this topic, we'll hear this word favorable balance, favorable bank balance many times. So what do you mean by a favorable bank balance? Favorable bank balance is nothing but having money in your bank account. So when you have money in your bank account, it is a favorable balance. So in cash book bank account or bank column, in our books, when we have debit side balance, to balance brought down. When will we have a debit balance? Only when deposits are greater than withdrawals. We will have a favorable balance. That means our money is there in the bank. Our money is deposited in the bank. Such balance is called as a favorable balance. So when deposits are more than withdrawals, so balance will automatically be on the debit side. Now, in the case of the books of the bank, that is books of the bank, the passbook will show a credit balance. Again we said deposits are greater than withdrawals. So if the customer has deposited 10,000 and has withdrawn only 1,000, so the customer has a favorable balance of 9,000, which will be shown on the credit side of the passbook. Okay. Next, what do you mean by overdraft balance or overdrawn balance? Now, Overdrawn balance means we have drawn more than what we have deposited. That means withdrawals are greater than deposits. This can be possible only when the bank allows you a facility called as the overdraft facility. It is like a temporary loan given by the bank. So your withdrawals can exceed your deposits only when the bank permits, only when the bank has provided you with this facility of overdraft facility. Overdraft facility is nothing but like a temporary loan given by the bank to the business. The bank will charge interest whenever we withdraw more than what we have deposited in the bank, and we would have to execute documents required for availing overdraft facility, because let us say you have deposited only 10,000 and you withdraw 1 lakh. That means bank has lent you 90,000 rupees. The bank has given you a loan of 90,000 rupees. If you don't provide any securities, you may run away with this money and never come back. So bank will also take some securities. If the bank gives you overdraft facility without taking any security, then we call it as a clean overdraft. Okay. Now, so what do you mean by overdraft balance, overdrawn balance? It is possible only when withdrawals are greater than deposits. Withdrawals are credit, deposits are debit. So if withdrawals are greater than deposits, then you will have a credit balance in the cash book. That is the bank column of the cash book. And the same way, in the books of the bank, the passbook will show a debit balance. In the books of the bank, the passbook will show a debit balance. So that is an overdraft balance. So to summarize, we will say favorable balance means cash book. Whenever we say cash book, we are referring to the bank column of the cash book. We'll say debit side balance, and passbook, that is the books of the bank, credit side balance. When we say overdraft balance, what is overdraft balance? Overdrawn balance, we have withdrawn more than what we have deposited. In such case, we'll say cash book. That means the bank column, credit balance, and passbook will have a debit balance. So favorable balance means debit balance in cash book and credit balance in the passbook. Overdraft balance means credit balance in the cash book and debit balance in the passbook. Okay, so these are the terms we use in this topic called as the bank reconciliation statement. So I have introduced you some terms which we are going to use in this topic. Okay, in the next video we'll first learn how entries are recorded. Whenever we deal with the bank and we do some transactions, we'll learn how we record the entries and how the banks are going to record these entries in the next video. Thank you.